How you doing, friends? Ernie here, and this is the zero-dte.com or zero-dte podcast. You can find it at zero-dte.com/podcast. Also broadcast live on YouTube. It is completely unscripted. I usually don't know what I'm going to talk about until a few minutes before I get on. And I've managed to make it so far to 55 episodes. Nice round number. Today is November 10th, Wednesday. And that means that it is a zero DTE day. Monday, Wednesday, and Friday, those are the days that we trade. We trade a special strategy or strategies, methods, and a very specific continuous improvement process. Kaizen. Can you say that? Kaizen. That means good change, and some people also translate that to continuous improvement, but that's what we do here. We are masters of the asymmetric trade. What we do is we put on tiny little risk trades going after very, very large profit. Excuse me. Asymmetric trades, small risk, large profit. Now, every once in a while, we hit that large profit right on the nail on the head, right on the head. Bam! Right between the eyes. Right between the eyes of the butterfly. That's a segue into what this is all about, and that is about our primary strategy or strategy type, and that's the butterfly trade. A butterfly that most people are aware of is an options trade that has two short strikes that have the same strike, and then your risk is capped on both the downside and the upside with one long strike on either side. And the butterfly is typically made up of either a put or call. So they're all puts or all calls. Two short puts, the same strike, and then a lower priced put that is long and an upper priced put that is also long. And then the power of that strategy, or it is in fact a premium collection strategy, which means that I got an itchy ear today. Last week I had an itchy nose. I don't know if that means something. Anybody that knows anything about itchy body parts, let me know. Well, no, don't let me know. So this is primarily a premium collection strategy. So we're really relying on those short puts or those short strikes and providing us with the ability to collect premium. That's what we do. Now, there are a number of different variety of butterflies that we can use. We can use a broken wing butterfly, which is not symmetric. It is asymmetric. That's where one of the spreads, now you can think of the long and the short on each side of the butterfly as a spread. One of the spreads is wider than the other. And the reason why we would do this is to adjust our risk depending on where we are or where we think the likelihood that the market's going to go. Now, most people use the butterfly as a market neutral trading device, but I'll tell you that market neutral is not the way to go. Simply isn't. That required more water. The butterfly is at its least effective as a market neutral strategy because the odds that you're going to land inside of that butterfly once you put it on and you try to center those short strikes at the money are very, very low. You actually have greater odds of success and greater probability of profit and probability of touch if you treat it as a directional strategy and you put it out of the money. Now, how much you put it out of the money, that is the nut. That is everything. And how and where you actually place that strategy relative to the market structure and the momentum in that market also All of these things are part of our strategy. We're going after, again, large profits, taking very, very tiny risks. And of course, we are trying to maximize our occurrences and, how often we actually are in the money, but that is not as important as following a set of guidelines so that we can be in the money or within profitability more than the risk that we take. That's pretty much it. The maximum trade or the maximum return that we can get is when we pin the trade. It's like pinning a butterfly on the board, right? Pinning a trade means that we have expired. The butterfly has expired because this is a 0 DTE, right? We are trading the last day of expiration because the premium is decaying at its fastest rate. And we use the butterfly because it is perfect for collecting premium. And we try to get, if possible, if we've got price right at that short strike, we'd love to be able to bring that to expiration because that would allow us to collect the maximum amount of profit. And when we do that, sometimes we can make as much as 1,500 or 2,000% return on the risk that we take. I know that sounds crazy for a one-day trade, a 2,000% return, but that's what we do. Today, many people took what it looks like. There were many that took 100, 200, 300%, but there were some that took quite a bit more, maybe 800 or 900%. Maybe even more than that. It looks like somebody took probably almost, all right, there was an 800%, and I think somebody out there has taken much more. That is what we're doing. We are not an income strategy. We are a growth strategy. We're going after the unknowable. We are putting on asymmetric risks to return asymmetric returns. It's a mini black swan, right? That's what we're in it for. We're in it for that spurt of growth with very little risk so that the losses do not really hurt us. And that smooths out our equity curve, advances it with very little drawdowns. Now, during volatility regimes like the one that we're living in currently, it makes it a little bit more difficult because low volatility is very difficult to trade regardless of whether you're doing it with the 0 DT or not, but particularly if you're an options premium collector, it is definitely more difficult because we need that sort of infusion of premium, and that usually comes with a little bit more volatility. We also need those nice clean moves. Now today we got one of those clean moves, and we were able to call it. It was at least a 2 standard deviation move outside of what the expected move was. Now here's the thing, what we're talking about today, and if you've read the title, it says how to catch or adjust a butterfly that got away. Now every once in a while, let's say that during low volatility times, about 50% of the time, we have losing trades. Price starts moving against us. It could start, like this morning, it started moving in our direction, and then it just decided to go the other way. And so you have to make a decision. Do I want to just let the trade go? And that's a perfectly good decision to make in our strategy because the risk is so low that we can easily absorb multiple losses in a row without even thinking about it. Of course we think about it, but it doesn't hurt. Unlike other strategies that are employing the 0 DTE, whatever method that they're using, we do an inversion of risk. They take huge risks to make small profits. We take small risks to make huge profits. Completely the opposite. Our strategy requires, I think, a great deal more care in terms of the way we fashion the trade. Skill as well, right? But it also requires or results in far less anxiety. And it's a very comfortable way to trade, and we can make good decisions when we're not anxious, unlike the other ways that trade this strategy. So I'm getting off track again here, but let me get back to, well, what happens when a trade gets away from you? Like today. We set up our butterfly in a very specific place based on the market structure and the way things were going that morning. We had a CPI report that said, hey, inflation's here to stay. That kind of freaked out the market initially. And then all of a sudden the market went up for whatever reason. Who knows? But we stuck to our guns, and it looked like it was going to invalidate our bearish trade. The market went up against it. So it went far enough up that the short strikes came to almost maximum profit. Now, that wouldn't really help us at all because we still have the long strikes on there capping our gains when it goes out of the money like that. However, there was an opportunity there. What would happen if our original analysis was correct, and then even though the market went up and maximized the amount of gains that you could make on those short strikes, but then it decided to turn around? And if it was later in the day, premium and the T0 line or the profit line would have contracted a bit. It would have made it more difficult to make profit as it was going down. So what we decided to do was one of the only times we ever do an adjustment on a butterfly, and that is that when price goes too far out of the money, we wait until there's hardly anything left on those short strikes and we buy them back, and we leave the long strikes on in the event that price may reverse and come down through. Now it's not working against the short strikes. They're like supercharged, two puts, and price coming down. So that's what we did. As a matter of fact, we did the exact same trade on Friday, and that was a big winner there too. It seems that these trades make more sense in these low volatility regimes. Last Friday was a little bit different. We did not put on an asymmetric butterfly where we just take off those two strikes. We had an unbalanced butterfly where there are actually three short strikes. That's because an unbalanced butterfly is a broken wing butterfly where it's 1-2-1, two long strikes and two short strikes, with an additional credit spread grafted onto it with another short strike and another long strike. So now it's a 1-2-3 or 1-3-2. Three short strikes, one long strike on one side, two on the other. Now this provides even more flexibility in this idea where you can buy back the short strikes, but you wouldn't just buy back the short strikes. You could buy back all three of the short strikes and leave the long strikes alone, or you could buy back all three strikes and one long strike, or all three short strikes and two long strikes and leave just one long strike going. So you have a lot more flexibility in terms of adjusting and crafting your trade should it reverse. And that's what we did last week, and that ended up very nicely. This week it was a symmetric, and we just took off the two short strikes, and it worked out fine. So that is how you adjust a butterfly. Unlike a spread or an iron condor where you might roll a wing closer to from the strong side, you would roll it towards price as price was moving away and increasing the value of that credit spread. You would roll it up towards price and make the iron condor narrower, and then realize that profit. And then when you do the roll, you roll it for a credit, so you're adding additional credit on top of that. So you can roll with an iron condor. You can't really roll with a butterfly because there's nowhere to roll to. The spread is already as far as it's going to go. It's all the short strikes are meeting at an apex. So really the only option then for adjustment on a butterfly is not a roll or a change up of the position, but it is a removal or a realization of the profit that's there to remove all the risk from the remaining strikes that are there. In the event, now it may not work out for you at all. And so there's no really harm done if price doesn't reverse. All it means is that you book those profits, they're there, however, they were offset by the long strikes. However, if price decides to reverse, and now you have these naked longs there, I know that doesn't, maybe you're saying, hey, how can you have a naked long? You can. You can have naked short, naked long. That just means there's not another offsetting contract. You have these naked longs there that are now supercharged or free from the oppression of those short strikes. So if price were to come down with the short strikes in place, those short strikes would then decrease in value, and they would take away from the gains you would normally have made from those long strikes. But with them away and out of the picture and the gain already booked, now those long strikes are full power. Full power. And so now you don't have to come down as far on that reversal to make a good profit. You can still you can make a good profit no matter how far it goes down and make it faster. So that is how you adjust a butterfly. You adjust it when price goes out of the money and the short strikes can be bought back for a small amount or nothing. You can never really buy them back for nothing, but you want to buy them back for as little as possible. You want all of the value to be out of them, because then that elevates or removes the risk from the remaining long strikes. And then they're there as a free ride, and you're hoping for that free ride. And today we got that free ride. We got it. When is your butterfly course coming out? I actually have it already in pieces. There's several units inside the course right now, and there's also additional material inside the Discord. So when you become a member, you can have access to all of this. But it is still a work in progress, and it will be for quite some time. But there is enough there to give you the basics of what we do, how we fashion and use butterflies as premium collection devices out of the money to create asymmetric trades with small risk and huge profit potential. And that's the way we roll, or that's the way we fly, or that's the way we flutter. All right. That's all I've got for today. I want to thank you very much for coming by. Today was a good day. Friday was a good day. Monday wasn't so good. It was a minimal loss, though. And we're moving on. Volatility now is peeking its head up above that line of demarcation that we have. We like volatility to be above 17. We'd love it to be in the 20s. That's where we get our best performance. But at least it's getting up there. We'd like to see the market pull back a little bit more, and I think it will. And that's it. That's the story for today. If you would like to try this service, go to zero-dash. You never forget the dash. zero-dte.com/try. Try. zero-dte.com/try. Get a 4-week trial. You become a member. I rebate the cost of that trial to you. You'll get first-class, world-class support. You're going to learn strategies, methods, and a continuous improvement process. All within that 4 weeks. The 4 weeks alone, that is going to be an education in of itself. But we're focused, and I am focused, on making you the best trader you can possibly be with this extremely strong strategy and process that we put in place. So give it a shot. We'd love to see you there. All right. Signing off now. Thank you very much for showing up. It is time to go. Peace. Oh, where? I can never find it. I gotta move this window. There it is. End the stream. Take care.